Did you know that one share of Nestle costs over 18,000 rupees? And one share of MRF costs over 75,000. As a retail investor, investing in such stocks becomes difficult given the cost of a single share. Well, let me introduce you to fractional shares. Fractional shares is a concept that helps address this issue for retail investors globally. It helps you to invest into such stocks via fractional ownership of a stock unit. In this video, we will explore what are fractional shares, how do they really work, why does it make sense to invest into these. While it is not yet allowed in the Indian exchanges, but a lot of exchanges in the world allow you to buy or sell fractional shares. As the name suggests, they are fractions of an entire share. So, instead of buying one expensive share, you can simply buy, let's say, half of the share. Your fractional share is treated just like a complete share. So, you are also entitled to dividend. Of course, if the per share dividend is $10, you have 0.5 shares, so you will earn $5. So earlier investors would end up with fractional shares during a stock split, a merger or an acquisition. And since the Indian exchanges only allows complete shares to be bought or sold, it creates a challenge for investors. But how exactly do investors end up with fractional shares during these events? Let's start with stock splits. Suppose you have 13 shares of a company. Now that the company announces a stock split of 3 or 2, basically for every 2 shares you own, they will be replaced by 3 shares. Which means your 13 shares will now be 19.5 shares. So what do you do now? Most companies round up to the closest number when this happens. So you will end up with 20 shares. Now, what if there's a merger or an acquisition? Oftentimes, when there is a merger or an acquisition, the share value is redefined. Let's say you hold 17 shares of company A and then it merges with company B. The new entity decides to stay on the market under company B's name. Then B offers the shareholder of A a proportion of 1:4. So 16 of your shares of the company A will convert to 4 shares of company B. So what about the one remaining share of company A? That takes you total to 4.25 shares. When this happens, the trustee usually buys back the fractional share and credits the proceeds amount to the linked bank account. As we mentioned earlier, Indian exchanges do not allow you to buy or sell fractional shares. Some of the countries that allow transactions in fractional shares are USA, Canada, and even Korea. So why should someone buy fractional shares? There are 3 main reasons for it. Diversifying. As Warren Buffett famously said, don't put all your eggs in one basket. Owning fractional shares when you have a low capital to invest can help you invest in a wider portfolio. Expensive stocks. Even people with a decent capital to invest are reluctant to invest a huge sum of money in an expensive share. That's where fractional shares helps them. Precise allocation. If you are someone who decides to invest exactly 10,000 in each stock, then fractional shares help you achieve that. So, if a stock is priced at 8,000, you can buy 1.25 shares of it. There have been some discussions about introducing the trading of fractional shares in India by the Ministry of Corporate Affairs, but SEBI is yet to take a stand on it. An executive at Stock Exchange said, issues around bonus shares, rights issues that need to be sorted. The benefit that will occur is not clear at the moment as there are challenges. The Ministry of Corporate Affairs suggested some amendments to the Companies Act 2013 to provide a framework for fractional shares. While the law will provide the framework from a regulatory standpoint, there are several decisions to be made. For instance, market regulator SEBI will have to allow for such a regime in the first place. Even tax authorities will have to provide for it in their statuses. In the coming years, it will be interesting to witness the change in the volatility of expensive stocks if fractional shares are allowed.